today is that students will be able to calculate any payroll deduction other than federal and state tax. Federal and state tax are calculated differently. We're going to talk about that tomorrow. So today we're just going to do everything else. Students will be able to recall different types of statutory and voluntary payroll deductions. Statutory, what does that mean? It's required. Okay, required deductions. Payroll deductions. You do not have to write or type all of this, but you do need to know some of these. You do have to type some of them. I'll tell you what you need to type. Yeah. Payroll deductions are withholdings, also known as withholdings. They're both the same. Not the same, but we're talking about the same thing. They are taxes and deductions withheld from an employee paycheck by the employer. Types of statutory withholdings are required withholdings, ones that your boss has to take out. You need to know the different types of required withholdings. So payroll taxes must be withheld from an employee's paycheck. This is required by law. Employers must hand these withholdings over to the various tax agencies. Payroll tax deductions include the following. This is what you need to know. Required withholdings, federal income tax. Can you see that? Do you want me to turn the light off? Another required withholding, Social Security. Another required withholding, Medicare. Another required withholding, state and local. Okay? This is for anyone who earns over $200,000. This is an additional Medicare tax of 0.9%. So once you earn that $200,001, you have to add an additional 0.9% to your Medicare tax. That started in 2013. So we have required taxes: federal, Social Security, Medicare, state, and any local taxes. Federal tax we're going to talk about tomorrow, how to find it. Social Security is 6.2%. up to the annual max amount, and we'll talk about that in a minute. Medicare tax is always 1.45% of your gross earnings. State income tax withholding varies by state. We're going to learn how to find Ohio's tomorrow. And local tax withholdings, city, county, school district taxes, state disability or unemployment insurance. Those types of taxes vary by location where you work or where you live. Where you work or where you live, those vary. They're not always going to be the same. Voluntary payroll deductions. Voluntary payroll deductions are withheld from an employee's paycheck only if the employee has agreed to the deduction. Voluntary deductions pay for various benefits which the employee has chosen to participate in. Voluntary payroll deductions include, but they are not limited to, the following: health insurance premiums, life insurance premiums, retirement plan contributions, employee stock purchase plans, meals, uniforms, union dues, and maybe any other job-related expenses. Now, voluntary payroll deductions are sometimes paid with pre-tax dollars and sometimes paid with after-tax dollars, depending on the type of benefit that's being paid for. You need to know voluntary payroll deductions could be these, but are not limited to health insurance, life insurance, retirement plan, a stock option, meals, uniforms, union dues. You need to be able to see those and say, oh, that's voluntary. Oh, that's voluntary. The first type of deduction we are going to calculate is called Social Security. Everybody is probably familiar with Social Security. It's started with the Federal Insurance Contribution Act, also known as FICA. On your pay stub, if you see the word FICA, F-I-C-A, it's an acronym for Federal Insurance Contribution Act, which stands for Social Security, and that's the Social Security coming out of your paycheck. This was originally designed in the 1930s by the United States government to give monthly benefits to retired workers. There are problems with Social Security, however, because $1,000 today is not the same as $1,000 in 1950 or 1960. The current rate right now is 6.2%, and the 2015 taxable wage base is $118,500. What is a taxable wage base? A taxable wage base is this: the amount that is taxable. Anything over $118,500 does not get taxed Social Security tax. That makes sense? So at $118,001, that dollar does not get taxed. You have to pay tax up to $118,500. So for example, if I am wealthy and I make $20,000 in January, do I have to pay Social Security tax? Yes. So I pay FICA tax because I've only made $20,000 this year so far. In February, do I have to pay Social Security tax? Yes, because now I've made $50,000 total, and I do have to pay FICA. In March, I add $40,000, which puts me at $90,000 for the year. Do I have to pay FICA? Yes. In April, I add an additional $25,000, which puts me at $115,000. Do I have to pay FICA? Yes. Now, here's the tricky part. The next $20,000 puts me over the $118,500 limit. How much of that $20,000 do I have to pay Social Security tax on? Well, between $115,000 and $118,500 is what? Yeah, $3,500. So I'm going to take my $118,500, subtract out my $115,000 because that's what I've already paid FICA tax on. I only have to pay on $3,500. So of that $20,000, $3,500 pays FICA. The remainder does not. Only $3,500. That is the number one mistake made by students. They forget that it has a limit. Number one mistake. Any more questions? What if I make $30,000 in June? How much FICA tax do I have to pay? None. Okay? I get to keep the money that would normally go to FICA because I've reached the $118,500 limit. Medicare tax. A tax deducted from an employee's paycheck that goes to pay for medical benefits for people over 65 years of age and for disability. People on disability can also get Medicare. That's not in the definition, but you can add it if you'd like. It is paid for by both employers and employees. Something that's kind of important to know. When you give Social Security and Medicare to the government out of your paycheck, your boss takes it out. Something that most people don't know is that your boss has to match the amount that you put in. For example, suppose I'm the boss. I own, let's say, I sell pencils because I love pencils. I have pencil company. Okay? And I have employees. Okay? I have employees. Paul's my employee. Okay? Paul makes, let's just say Paul makes $1,000. And I have to take FICA tax out for Paul. What is the FICA tax I have to take out? 6.2% of his gross. So I multiply that by 6.2%. And then what's his Medicare? 1.45. So 6.2% of 1,000 is what? What is it? 62. 1.45%, it's $14.50. Thank you. Here's what Paul has to pay to Social Security and Medicare. As the owner of Pencil Company, I have to send that amount in, plus I have to match it. I have to add $62 to Social Security. I have to add $14.50 to Medicare, and that total is the amount that I, as the owner of Pencil Company, have to mail in. Most people don't know that. So not only does your boss have to pay your wage, he also has to match your Social Security and Medicare. You are expensive. So when your boss gets on you, give him some slack because you are expensive. That's not the only thing he pays for. City tax is a tax that is collected for working or living in a city. City tax rates vary by city. The city of New Philly, just for example, currently charges 1.5% of gross wages. The hardest thing to understand about city tax is you only have to pay for one. If you live in Dover and work in Philly, you have to pay one or the other or the difference. What does that mean? If Dover's tax is 2%, I don't know if it is or not. I haven't looked it up, but let's just pretend. If Dover charges a 2% tax and Philly a 1.5%, and you live in Dover and you work in Philly, you can choose to pay 1.5% to New Philly, but then you have to pay the difference to Dover. So that'd be 2 minus 1.5, and that's 5% or 0.5% to Dover. Does that make sense? They'll let you write off the 1.5%, but you have to pay the difference to Dover. Does that make sense? If they're both 1.5%, you only have to pay one or the other. All right. We're going to calculate these deductions that we've learned today. If I have gross earnings of $1,453.55, and I'm an employee that has not exceeded the Social Security max of $118,500 for the year, how do I find the withholdings for this employee? Social Security, I'm going to take my gross earnings, $1,453.55, and we already talked about how much comes out. 6.2% of gross earnings. So I take my $1,453.55 and multiply it by 6.2%. Now, the number one mistake that I get, this is not hard. Oops. 6.2%. The number one mistake I get by students is they use 62% instead of 6.2%. This in the calculator is 0.062. Do not put 62% in. Put in 6.2%. 62% of your paycheck is a lot to Social Security. And what does that give me? Yes, $90.12. Now make sure, another mistake that I've seen a lot, that when you round to the nearest cent. The nearest cent is the second decimal place. When you get paid, your boss writes you a paycheck, you do not get paid $90.1210. You get paid $90.12. They round that. Round to the nearest cent. Medicare, I take my gross earnings, $1,455. I'm sorry, $53.55. And multiply it by what's my Medicare rate? 1.45%. Remember, do not put in 14.5%. Do not put in 145%. It's 0.0145. That is the decimal. That's the number one mistake when calculating these. You should get $21.08. We have to round that. $21.08. That comes out as, if you want to see what it looks like, it's 21.0764. I have to round to this one, so I look at the number before it. The 6 tells me it's 8 cents. Round to the nearest cent. That was the number one mistake that I marked wrong on the tests that I graded last night. Is rounding. City tax. I take my gross pay, $1,453.55, multiply it by whatever the city tax is. If you were in New Philly, it'd be 1.5, but we are in Cuyahoga Heights, so it's 2%. So I'm multiplying by 0.02. You get $29.07. And there they are. One thing we need to get better at on tests and quizzes is putting a dollar sign and circling and underlining our answers. We're talking about money here. You need dollar signs. One more example. And then we'll be done. Gross earnings are $3,550. This employee has already earned $116,966 this year. That is very important for one of these deductions. When I calculate Social Security, what is the limit, the taxable wage base? This year it's $118,500. Is this employee go over $118,500 with this paycheck? Yes. So how much does he have to pay out of this paycheck? How much is actually taxable? I take my $118,500, which is my limit, subtract out my $116,966, and that's how I figure out how much he has, what's taxable, what's left that's taxable. $1,534 is left. And that is the number we multiply by our tax rate, 6.2%. .062 in your calculator. $95.11. The next paycheck, he does not have to pay any to Social Security. Medicare. I'm taking my gross pay. Does Medicare have a limit? Nope, it's just after you make $200,000, you have to pay an additional 9.9%. So we pay it on the entire thing, $3,550 times 1.45%. .0145 is how it goes in your calculator. $51.48. City tax, we're still living in Cuyahoga Heights. It's 2%. I take my $3,550, multiply it by 2%, or 0.02, and I get $71. And I have two more. And remember, these are what type of deductions? Who remembers what those are called? Not involuntary, but voluntary. IRA is my retirement account, And SDI is state disability, which state disability may be required. But IRA is definitely voluntary. So $3,550 times 10%, you should be able to do that in your head, is $355. And then state disability, 1%, move the decimal place one more time, $35.50. And there they are. Any questions?